So in early 2026, something absolutely wild happened in the financial world. Gold and silver prices didn't just go up, they exploded, smashing all-time records and catching almost everyone off guard. But this wasn't just another market rally. It was more like a signal flare, lighting up these deep, powerful shifts happening in our global economy. So let's follow that signal and really unpack what's going on here. And it all peaked on January 14th. Gold hit a stunning new all-time high, over $4,600 an ounce. I mean, think about that. A price that would have sounded like science fiction just a year ago was suddenly reality. It was a peak that just screamed for an explanation. And this wasn't some flash in the pan, some overnight spike. As you can see right here on this chart, it was the climax of a massive 72% surge over the last 12 months. When an asset that's been the bedrock of money for, thousands of years moves this fast, this dramatically, it forces us to ask a really important question. What on earth is the market trying to tell us? To answer that, we've got to start by looking at the two immediate catalysts that lit the fuse on this whole thing. It was a rare, kind of perfect storm of forces that came together for precious metals. The whole rally was sparked by two very different forces just colliding. On one side, you had the math, a pretty subtle but really significant economic number. Core inflation came in a little softer than expected, which gave the Federal Reserve the green light to think about cutting interest rates. And when rates go down, assets like gold, which don't pay you any interest, suddenly look a whole lot more attractive. And then, on the other side, you had just pure mayhem, a series of explosive geopolitical shocks that sent investors scrambling for cover. And this slide, wow, it just captures how chaotic things got and how fast. I mean, in just a matter of days, the world saw a head of state captured in Venezuela, spiraling civil unrest in Iran, and then this renewed kind of bizarre talk from the US about acquiring Greenland. But the real bombshell, at least for the markets, was a political move that seemed to challenge the independence of the US Federal Reserve itself. This cascade of instability sent a massive shockwave through the system, and it drove a huge flight to the perceived safety of gold. But here's the thing. Those short-term triggers, they were just the sparks. The real fuel for this fire had been piling up for years, thanks to a much deeper structural trend that is quietly redrawing the map of the global financial order. And that monumental shift has a name: de-dollarization. It's exactly what it sounds like. It's a deliberate policy by central banks all over the world to actively, purposefully reduce how much they rely on the US dollar. And what are they shifting into? Well, their number one choice has been physical gold. And the scale of this is it's breathtaking. In recent years, central banks have been gobbling up over 900 tons of gold every single year. That is more than double their average purchases from the decade before. This isn't a blip on the radar. It's a fundamental change in who is buying gold and why. So what's the result of all that buying? Well, it's absolutely staggering. Central banks around the world now collectively hold around $4 trillion worth of gold. And in a historic flip that nobody would have thought possible just a few years ago, gold has now officially overtaken U.S. Treasuries as the world's single largest foreign reserve asset. Think about that for a second. So why? Why are they doing this? Well, the motivation became crystal clear back in 2022 when Russia's foreign reserves were frozen. For every central banker watching around the world, the message was simple and, frankly, terrifying: dollar assets can be used as a weapon. It really boils down to this simple idea. A dollar in a U.S. bank can be frozen by a political decision. A gold bar in your own vault cannot. Gold is the ultimate sovereign asset because it's free from the political risk of any one country. Okay, so that's gold. But let's shift gears and talk about silver, because its story is completely different. While gold's rise is all about this huge monetary change, silver's rise is being fueled by a technological and industrial revolution. See, unlike gold, silver is kind of living this secret double life now. It's not just a precious metal anymore. As this chart shows you, over half of all silver demand now comes from industry. It's been transformed into this critical, indispensable strategic metal. And look at that. A huge chunk of that demand is coming directly from making solar panels. And this has created a fundamental tension in the market, a classic squeeze. On one side, you've got demand just skyrocketing. I mean, silver is essential for building our future, right? It's in solar panels, electric vehicles, AI hardware, 5G networks, you name it. But on the other side, supply just can't keep up. The problem is, most silver is mined as a byproduct of other metals, like copper or zinc. You can't just flip a switch and say, let's mine more silver, even when the price is going through the roof. And this isn't just some theory, right? The numbers are stark. In 2025 alone, the world used 427 million more ounces of silver than all the mines in the world produced. That was the 5th year in a row of a major deficit. What that means is we're systematically draining the world's stockpiles of silver. And just to throw another wrench in the works, China, which is the dominant player in processing the world's silver, has introduced a new export licensing system. This move gives them a ton of control over global supply, basically tightening the screws on a market that was already incredibly tight to begin with. All right, so we've peeled back the layers on the immediate triggers and the deep structural trends for both gold and silver. But the big question is, what happens next? Where could we possibly go from these record highs? Well, if you look at the big banks, the institutional consensus is actually pretty bullish. This chart gives you a pretty clear snapshot of where they see things going. You've got powerhouses like Goldman Sachs and JP Morgan forecasting gold to push towards $5,000 an ounce in 2026, and some, like UBS, are projecting even higher. So naturally, this leads to the question, okay, so what does this mean for me? And this slide does a great job of illustrating how investors might think about this new landscape. The strategies really vary depending on your risk tolerance, from a more conservative approach focused on physical gold and ETFs just to preserve wealth, to a more aggressive stance that might include silver and mining stocks to try and capture that higher growth potential. So as we wrap this up, it's worth stepping back and asking one last big question. This historic rally, it might be more than just numbers flashing on a screen. It forces us to wonder, are we just watching prices go up? Or are we actually watching the entire financial rulebook of the last 50 years being rewritten right here, right before our very eyes?